Hello, this is Amy Schreiber, MCOL Content Manager, and I'd like to welcome our listeners to today's podcast session. We are pleased to have Doug Sherlock, Senior Healthcare Analyst for Sherlock Company, joining us today. Doug is here to give us his quarterly insights into financial markets of health plans.
Thanks, Amy. In this podcast, we'll review the performance of the managed care industry for the fourth quarter of 2019 and year-to-date 2020. We'll also discuss sector valuation indicators and operating trends. First, I want to speak to stock prices and valuation. As of March 4th, stock prices for the publicly traded health plans are down by 1.7% since the beginning of the year. This compares to the 3.1% decrease in the broader market measured by the S&P 500. Health plan sector market capitalization decreased by 3.9% year-to-date, since the decreases skewed towards the larger plans. On January 23rd, Centene announced that it had completed the acquisition of WellCare. For comparison purposes, our universe is now comprised of 7 publicly traded companies. Stock prices for 4 of the 7 plans lost ground so far this year, led by Triple S at 17.1%, followed by Anthem at 1.9%, United Health at 1.6%, Centene by 0.7%. Molina, on the other hand, increased by 4.9%. Cigna and Humana increased by 1.5% and 1.6% respectively. Valuation metrics were all lower since the beginning of the year, with price to trailing 12 months earnings decreasing by 0.7% to 15.6 times, and price to projected 2020 earnings lower by 11.2% to 13 times. Price to operating earnings decreased by 0.1% to 17 times. Price to sales fell by 2.3% to 0.7 times. Price per total member decreased by a little less than 1% to $3,000, and price per risk member fell by about 2% to $5,000. All rates of change are calculated holding the universe of health plans in both periods constant. Since our last podcast in November, average stock prices are higher by 3%. with health plan market capitalization increasing by 6.2%. The S&P 500 gained 0.3% since November. Health plan valuation metrics trended higher with the exception of price to projected 2020 earnings. Recent stock price movements are said to reflect a Super Tuesday effect. The election cycle can be a driver of managed care organization stock prices. This was particularly evident this year as the Democratic presidential candidates debate the elimination of the private health insurance industry or the expansion of the Affordable Care Act. On March 3rd, 2020, the market capitalization of health insurers was around $483 billion, and stocks for the year were down by, on average, 13.1%. The day after Super Tuesday, the market capitalization of health insurers was $519 billion, a gain of 7.3%. Stocks were also higher, on average, by 13%. Every stock in our universe was substantially higher. Molina by 16%, Anthem by 16%, and Centene by 16%. Cigna, Humana, and Molina were reverse losses that they had year to date. The managed care stock market is keeping a close eye on the current primary election and whether the candidate in the lead believes in a single-payer system or a pluralistic private health insurance system. For instance, the Wall Street Journal says that a big Super Tuesday for Joe Biden meant a super victory lap for health insurance shareholders on Wednesday. On to our review of operating trends. For the fourth quarter of 2019, combined ASO and risk membership increased by an average of 1%, while increasing by 1% in total to 130 million people. By average growth, I mean the average of each plan's growth rate. Total reflects the change in combined membership of the plans as a whole. Fully insured risk members increased by an average of 3% and in total by 2% to 70 million. Medicaid plans experienced an average decrease of 4% and total growth of 1% to 15 million members. Commercial plans reported an average gain of 6%, increasing to a total of 56 million risk members. Molina reported the largest decline at 13% due to a decline in marketplace membership. The proportion of total members served under self-funded ASO arrangements grew by 0.1 percentage points to 46.3%. On average, the plans posted a 1.6% decrease. ASO membership was up in total by 1.3% to 60 million. Revenues for all plans increased by an average of 10% and in total by 9% to $137 billion. Medicaid plans reported $23 billion in revenues, an average increase of 4%, and a total increase of 9%. Centene posted the largest gains in revenues for Medicaid plans by 14%. Commercial plans increased on average 12% and in total by 9% to $114 billion. Anthem posted the largest increase to revenues of 16% to $27 billion. Premium rates for all plans increased by an average of 6%. Medicaid plans and commercial plans increased at an average growth rate of 7% and 6% respectively. Note that the premium growth does not adjust for changes in product mix, geographic factors, or benefit design changes within the products offered by these plans. Operating earnings for the fourth quarter of $7 billion reflects a total increase of 11% and an average decrease of 2.6%. The primary driver for the average decrease were Medicaid plans. From this and other rate change calculations, I am omitting Triple S. Its negative trends surged. Medicaid plans reported operating earnings of $491 million, an average and total decrease of 29%. Commercial plans gained ground to $6.5 billion in operating earnings, an average increase of 10%, and a total increase of 16%. Anthem had the largest percentage gain of 55% in operating earnings to $1 billion. Average operating margins for all plans decreased by 0.3 percentage points to 4.3%, again excluding Triple S. Medicaid plans posted a 1.2 percentage point decline to 3.3%. Commercial plans margin was higher at 4.8%, a gain of 0.1 percentage points. The health benefit ratio for all plans increased by 1.8 percentage points to 84.7%. Note that Sherlock Company's calculation of health benefit ratios excludes the impact of favorable and unfavorable prior period reserve development. When they are announced, we remove them from the expenses recognized in the reporting period and then allocate them to the quarters in which the underestimated expenses actually took place. The average health benefit ratios for Medicaid plans increased by 2.1 percentage points to 83.9%. Commercial plans posted a 1.6 percentage point increase in their health benefit ratio to 85.1%. The administrative expense ratio fell by 1.3 percentage points to 10.2%. Medicaid plans reported an average decline of 0.9 percentage points to 13.1%, while commercial plans experienced a 1.6 percentage point decrease to 8.8%. Anthem, a commercial plan, cited the decrease in administrative expenses to the suspension of the health insurance provider fee during 2019. Anthem notes the total amounts due from all health insurers, not just Anthem in 2018, was $14.3 billion. The health insurance provider fee has resumed and is to increase to $15.5 billion for health insurers in 2020. Non-operating earnings grew by $1.8 billion. Our calculation of non-operating income is the sum of investment earnings income earned in non-health lines of business, less interest expenses, Medicaid plans reported non-operating gains of $22 million compared to a loss in the prior year's quarter of $15 million. Commercial plans experienced total increase of $1.8 billion versus $1.5 billion. All these non-operating earnings values exclude SSS for reasons we described earlier. Net earnings for the fourth quarter were higher for the plans, increasing by 110% and in total by 52% to $6.7 billion. Medicaid plans had net earnings of $394 million, a total decrease of 19.4% and an average decrease of 19.2%. Commercial plans, on the other hand, generated $6.9 billion in net earnings, a total increase of 61% and an average increase of 174%. Cigna had the largest percent gain of net earnings of 503% to $1.3 billion. This is primarily due to the $1.2 billion increase in its non-operating income. For the year, revenues for all plans increased by an average of 10% and in total by 11% to $488 billion. Medicaid plans reported $91 billion in revenues, an average increase of 7% and a total increase of 16%. Centene posted the largest gains in revenues for Medicaid plans by 24%. Commercial plans increased by an average of 11% and in total by 10% to $396 billion. Net income for 2019 improved by a total of 31% to $29 billion. Commercial plans increased in total by 33% to $27 billion. Medicaid plans increased by $2 billion to a total gain of 5.8%. Cigna, a commercial plan, had net income for 2019 of $6 billion compared to $3 billion in 2018. Operating income increased by a total of 12% to $32 billion. Commercial plans improved their operating income in total by $4 billion to $30 billion. Medicaid plans had operating income of $2.7 billion in 2019, a total decline of 9% from $3 billion in the prior year. All revenue and income percent changes exclude SSS, again, because of basically the volatility in every one of their metrics. I do want to close by touching on a key environmental factor. As noted earlier, the publicly traded health plans have, until yesterday, generally underperformed the market. One possible factor is the effect of proposals of candidates for president concerning Medicare for All. As we understand it, under Medicare for all insurance would be government-run and would legally preclude competition by private insurers. This would make implementation of Medicare for All complex, since it would necessarily disrupt care for existing Medicare members. First, right now, many Medicare beneficiaries don't have Medicare, at least in the commonly understood sense. Based on the February 1 effectives, of the approximately 60 million beneficiaries, 24.7 million are enrolled in various forms of comprehensive Medicare Advantage products, or approximately 40% of them. These beneficiaries would all have to switch health plans under Medicare for All. In addition, employees in regular Medicare may also be affected. Recall that competition by private insurers would not be allowed. Does this mean that private health plans that are now contracted to provide the actual claims processing and customer services under regular Medicare would then be succeeded by government employees who normally have higher wages and benefits? Again, it's important to recognize that if you pick up the phone as a regular Medicare beneficiary, you will be speaking with an employee probably of a Blue Cross Blue Shield plan, irrespective of how they answer the phone. At minimum, it would mean that Medicare crossover fees that offset amounts paid to fiscal intermediaries would be eliminated, thereby immediately increasing regular Medicare's administrative costs. Finally, since intermediaries are subsidiaries of private insurers, if such intermediaries are permitted under Medicare for All, they would operate at a smaller scale and presumably at higher cost. In Senator Sanders' view, central to the funding for universal health insurance, higher payments to providers, and the development of technologies that cure disease is avoiding wasting money on, quote, outrageous administrative costs, close quote. Avoiding waste is always an exercise in prudential judgment, since most expenses are intended by the entity spending them to produce a benefit. The target for managers is actually optimal costs. The Sherlock benchmarks may provide you with the insights that you need to achieve optimal costs. If you are interested in participating in any of our universes, please reach out to me. Those universes are Blue Cross Blue Shield, independent provider-sponsored plans, Medicare plans, Medicaid plans. In terms of timing, note that we will launch the surveys for the Blue and IPS plans in the next week or so. I hope that you will reach out to us if you would like to consider participation. As always, you can get a transcript of these remarks through MCOL or Sherlock Company. We look forward to hearing from you. This is Doug Sherlock of Sherlock Company.
You've been listening to Doug Sherlock share his quarterly insights into the financial markets of health plans.